It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise, to navigate the best moves for your portfolio. Today we're taking a look at players in the healthcare sector. I'm here with Skyler Weinand. He's Regan Capital Chief Investment Officer. Thanks for being here. It's good to see you.
Thank you.
So let's take a look at UnitedHealth, which is the stock that you like. Obviously, there has been a lot of drama, some of it quite tragic, that has involved this company. And even though the stock price looks like this, the stock's actually up over the past 12 months. I admit I was surprised to see that when I looked it up. So talk to us about why you like it. First of all, with that sort of round trip it's taken, you like the valuation of the stock here.
Yeah, first of all, healthcare is one of those sectors that's actually done fairly well this year. And so I took healthcare and I broke it down between, what's trading cheap and what's trading rich. And UnitedHealth, for a variety of reasons, is trading fairly cheaply in the healthcare sector. So at about a 20 PE, I think it's fairly attractive.
So let's talk about sort of the elephant in the room here. Obviously, there was the murder of an executive at the firm, but there's also sort of concerns about what the healthcare landscape is going to look like. But you don't think that this is going to cause permanent issues for the stock and for the company?
Yeah, when you look at America, aging, demographics, there are a lot more folks that are retiring every day than that are being born. So generally speaking, we're going to need healthcare, and Medicare, Medicaid, those are going to be huge pieces of that healthcare puzzle. So UnitedHealthcare sits in a really interesting spot. Yeah, there's some lawsuits. Yes, one of their executives was shot not too long ago, and I think those have been kind of buying opportunities. And you're looking at a stock that's done fairly well over the last year. Healthcare has done great this year as a defensive type of sector. And just demographics alone, let's get in healthcare. Let's get in and name one of the biggest in the business, UnitedHealthcare, at an attractive PE ratio.
And a company that has seen this sort of consistent growth over time because of that expansion and the need for healthcare that you're talking about.
Oh yeah, 11+% over the last 10-year compound annual CAGR. And so, I just think about the demographics as a whole, and it's why folks are gravitating towards healthcare, towards defense, some of the more defensive sectors out there. It's a no-brainer. And so use this opportunity, use these news events as opportunities to get into a name like UnitedHealthcare. So
let's talk about what could be a risk for the stock going forward. And that's, could there be some kind of reform to spending, to insurance spending, to Medicaid? I mean, we're already seeing some hints of that happening.
That is the elephant in the room, right? The current administration looking at programs, looking at overspending in Medicare, Medicaid, and thinking about, we're just going to fire 10% of the staff, or we're going to get rid of, we're only going to pay out 90% of expenditures. And obviously that's going to hit a firm like UnitedHealthcare, 400,000 employees. A lot of those employees could be on the chopping block if, let's say, the administration were to say, we're just going to cut payouts by 10%, which isn't out of the question.
Right. Yeah. All right. Well, that's something definitely to watch. But let's talk about the stock you don't like, which is Eli Lilly. This stock also, again, I was a little surprised to see its performance is pretty much similar to what we've seen from UnitedHealthcare. Yeah. It's had a big run too, and then come down because of its obesity medication. So flip side of UnitedHealth, it's got a higher valuation.
Yeah, you're looking at
peers.
Around a 50 PE. UnitedHealthcare is at 20. They performed very similarly over the last year. And so it's really just, when you look at that S&P Healthcare Index, I think this is the highest PE. These are the two of the largest market caps in that sector. So can they sustain this growth that they've seen? Does it really justify a tech-like ratio? I don't think so, because it's so reliant on new drugs coming out and the FDA approving those drugs. It's really hard to repeat that process over and over again. Well,
GLP-1s, which have been a big boost to them, that's been part of the big story here that has pushed up that revenue, right? That has been one of the triggers for that revenue growth. And even though there is expected still continuing adoption, you just don't think we're going to see the same kind of magnitude of percentage increases going forward.
Yeah, when you look at these two stocks and the amount of cash UNH is generating versus Lilly, it's like 5-6x earnings, okay? And so trading at a 50 plus PE, being reliant on the next drug to be as successful as the last one, you're walking a very fine line there, right? You know, what should this trade at? I don't know. It should trade at 30, 35 PE. And obviously UnitedHealth is a little bit slower of a grower. It doesn't have as many pops as this, but year-over-year performance will look very similar types of stocks.
Yeah, that's what I was saying with the 12-month. It is surprising. And as you mentioned, mainly relying on drug approval success and sales, sort of feeding the pipeline beast, if you will. Yeah. Let's talk about what could go right, though, for Eli Lilly here. You could see more FDA approvals. I'm going to let you say the name of that drug instead of me. What is this drug, first of all, and what could that do for Lilly?
Yeah, muvalaplin is a heart disease drug. They just had an approval, I think phase 2 approval in November. Very, very successful results for, you know, one of the biggest killers out there in America is heart disease, you know. And tons of Americans, as early as 30 years old these days, are going on heart medication, both statins and something like muvalaplin, which it's not going to eliminate plaque, or it's not a blocker per se, but it is bringing down blood pressure and relieving heart disease. So you're talking about this gigantic problem that they're solving, phase 2 approval. And you know, there's still some time to go, but you know, these are huge generational types of approvals that could go through. If that happens, okay, let's stay at the 50 PE. But you know, you're taking a huge bet on that continuing to happen.
Gotcha. Do you have positions in UnitedHealth or Eli Lilly?
I do not.
Okay, good to know. Skyler, thank you so much for being here. Good to see you. Thanks. And thank you for watching. Goodbye or goodbye. We'll bring you new episodes at 3:30 p.m. Eastern.